Hi, today it's Thursday, 28th of November 2013, and the time is right now 10:28 GMT, and we are looking at the NZDUSD H4 time frame. I'm going to make a brief study on the pair because our app's user Islan asked for it, and I believe there are many of you who might be interested in this pair. So first I'm using here Ichimoku Kinko-hyo, Bollinger Bands, fractals, these small arrows, alligator, and stochastics. It's no need for you to use all of this. I will leave only Ichimoku to have a look at the main trend, and then I will start adding up the rest to get a more specific picture of the price action. So at one glance we see that the pair is falling. Let's go to the daily time frame. We see that on the daily time frame biases are strongly bearish, although a bearish Kumo breakout has not happened yet, and it may be reversed at any moment, so we don't know if it will actually happen. We see here that we have a newborn bearish Kumo. We had a second span A, second span B cross. Price crossed and closed below Tenkan-sen long ago. We also had the cross of Tenkan-sen and Kijun-sen, the blue line and the red line, a bearish cross. First price crossed below Tenkan-sen, then crossed below Kijun-sen, then went up. Then we had this cross between the two lines. Then price went down again, then up again, then down again on the daily chart. That's a very, very ranging behavior that I'm sure it made many investors crazy. Now price wants to go below the Kumo to give a bearish Kumo breakout on the daily time frame, which is questionable. We can't know yet. On the weekly time frame, we see that actually the pair, the Kumo is in horizontal mode. That means consolidation, and I'm seeing a triangle here. To help you see it too, I will insert the trend lines. From mathematics we know that we need 2 points to define a line. Okay, it's not precision science here, so put them close to the closes or the opens of the candlesticks, and disregard the wicks if you want. Okay, that's an option. Put them high on the wicks if you want. That's an option too. So I draw the upper trend line of the triangle. This is a symmetrical triangle, and let me insert the lower trend line here. I could take it from down here. No, I will be more conservative, so here are the points I'll be using. I will make it as to have as lower height as possible, to make it as closer to a possible reality than as closer as possible. So okay, here we are, and now we will consider the triangles. I made it very small. Wait, here we are. Okay, so I will insert a vertical line now, defining the height. Okay, I will put it here, and let's see how many pips. We are at the level of 0.713 down here, and up here, okay, so here it's 0.894. Let me 894 minus 713, 181 pips, 180 pips. They might be 200, but I disregarded this part here. Anyway, so let's go back here. When the triangle breaks, the symmetrical triangle, as all the triangles, will break at the third quarter of its width. So the middle of it, I will insert a vertical line. The middle of the triangle is somewhere here, if you agree. So the third quarter, I will insert another vertical line, starts here. So the price is already moving inside the critical zone for the breakout. If the price falls, then we are going to have a huge downward move, a move of 180 pips below the breaking point, below the point where the price will break the lower the lower trend line of the triangle. If the breakout happens on the upper line, which doesn't seem very possible right now, okay, but we can't know for sure yet. So if it happens upwards, then the price will move upwards 180 pips above the upper trend line, above the point of the breakout. Let's see now, let's go back to the smaller time frames. So, and we didn't see the monthly. Wait, I will remove all these things. Okay, so let's go to the monthly. Wow, very little and very crazy data. Forget it. Let's go to the weekly time frame. We saw the weekly time frame with a triangle, and the daily again, we saw it. We also have a head and shoulders pattern. You see the head here. I would like to insert a shape, an ellipse here to show you the head, and I will change the color of it, and I will make it something light. So this is the head, and these are the shoulders. Let me insert actually we have 3 shoulders here. It's an alien. Don't worry. It still remains a very strong bearish reversal pattern. So things look truly bearish, truly bearish. See, when you look more carefully, when you start observing more, The more you observe, the more you watch, the more you see. So I take the outer shoulder here, the outer shoulder here, head and shoulders, bearish reversal pattern. Now, let's go. I will remove the objects from here. And let's go now to the H4 time frame. On the H4 time frame, we see that the price is actually on a bullish correction mood, although it's hanging below the Kumo and everything is bearish. And look here at this distance. I will magnify the chart. Look at this huge distance between the upper border and the lower border of the Kumo. This represents bearish momentum, and it's increasing, and it's huge. Now, we see that price is actually making a bullish correction, a bullish move. We will consider it a correction. It had made one like this here. So, don't enter. Take only short trades. And don't enter before you see the correction completed. And here you need the help of Bollinger Bands. I will insert the Bollinger Bands now. So we expect this move to go at least up to the middle Bollinger Band. Let's see what stochastics tell us. So I will insert stochastic, which combined with Bollinger Bands tell us a lot of things. So stochastics on the H4 time frame for the pair are still going up. So you wait to see if the pair will reach the 80 level, and if that happens, it will happen around the median Bollinger Band, because it doesn't seem to have the strength to go all the way up to the higher Bollinger Band. So either we have two scenarios: stochastics remain going up and price makes it up to the median Bollinger Band, and at the same time stochastics enter, cross 80 level line, enter the overbought zone and curve and return. They curve downwards and cross below 80 level, while price makes a swing high above the median Bollinger Band and falls again. That would be an ideal point when stochastics curve down and cross below 80 level. That would be an ideal short entry point for you. But if you are more conservative, if you want more confirmations, you can wait to see the price going all the way up it can go, and when it crosses below Tenkan-sen, Tenkan-sen is here, the red line of Ichimoku Kinko here, then you enter short. The second scenario, stochastics angle turn downwards in the midway before the price ever reaches the median Bollinger Band, like it happened here. They started going up, then they curved down, and price reached that point and then started falling again. So if we have this happening, then you can enter short when stochastics are strongly curved downwards. And because this is a big time frame, we have reasons to believe it and to consider it valid, whatever we see here. So if you want to see things in more details, go to H1 time frame. On H1 time frame, you see stochastics show you that the upward move is still young. So my suggestion that my opinion that price on H4 time frame will reach the median Bollinger Band, it seems to be confirmed by the picture you see on the H1 time frame. So on the H1 time frame, things look bullish for now. and that means you wait, because I told you that in this bearish environment you only take short trades. You don't want to be trapped into sudden to be long, and suddenly a big bearish move comes against you and wipes off your money. So watch the H1 time frame, watch how things end here. At the same time, switch to H4 time frame, and when you see everything reversing on H4 time frame, it will have already reversed on H1 time frame, then you enter short. But you must be 100% sure that the correction is over. Now you place your stop loss 150 pips above your short entry. Ideally that's enough zone, flexibility zone for your price, for the price. But if you follow this criteria, it won't be necessary, but it's a flexibility zone. And take profit target, well, stochastics will show you when stochastics will start going down. You will wait to see what will happen as the price meets the lower Bollinger Band, and when stochastics go below the 20 level and start turning upwards, that's an exit point from your short trade. Okay, I hope it all helped, and I wish you a lot of happy pips.